Domhnal Slattery. Avolon went public back in December at $20 a share. You came out with your first earnings report today. You beat the street on the top and bottom lines in the fourth quarter. How'd you do it?
Well, we've got very strong growth momentum in the business. We delivered, as you say, revenue well in excess of market expectations. Our adjusted net income came in at $179 million, up over 40% last year. Clearly, there was some IPO-related expenses that washed through on the income line. But what's driving our outperformance for the quarter is several factors. But the most important is we're continuing to reduce our borrowing costs. Borrowing costs for a lessor is our single biggest cost. And so year on year, Avolon has reduced its borrowing costs on its balance sheet from 4.4% last year to 3.8% this year. So that's a full 60 basis point reduction. So that's significantly driven through value for shareholders.
All right, what about the cost of airplanes? Because you had 137 airplanes at the end of the fourth quarter. How many do you expect to have at the end of the year?
Well, the good news there is we have locked in growth for 2015. So that's contracted aircraft that will deliver to our airline clients through this year of $1.6 billion. And that's 31 aircraft. So we know precisely when those aircraft will deliver. We have them financed, and therefore we know the profitability that will drive through our P&L. And of that $1.6 billion, $1.1 billion is actually coming in the first half of the year. So that'll turbocharge the P&L into the second half of the year.
We keep hearing about strength in the Gulf carriers. Why don't you talk about your Middle Eastern clients? How much business are you doing with them?
Well, we have significant business in the Middle East, and it's really growing very fast. I mean, Etihad and Emirates are the driving force, other players like Qatar. So Etihad, for example, in the broader group, because they have equity investments in a number of different airlines, so we have business with Etihad. We lease them A320s. One of their big investments in Europe is Air Berlin, large low-cost carrier based in Germany, but a big player throughout Europe. We have a significant portfolio of aircraft there. We lease aircraft to Alitalia. They recently invested in that airline, a turnaround story. And we also lease aircraft to Virgin Australia, which is another subsidiary of the broader Etihad group. And in fact, when you join up the entire portfolio of airplanes to the Etihad group, it's over $3 billion of business with the group.
Where's the value add in airplane leasing, or is it just all about the rates?
No, I mean, cost of funding is absolutely critical. So you have to have an attractive cost of funds, as Avolon does at this 3.8% that we are going into 2015. And relative to our public peers, we're right at the top end. In other words, our cost of funding is very good. What drives this business clearly, A, funds, B, access to equipment directly from the manufacturers. So Avolon has nearly $6.6 billion of locked-in growth. So we were one of the first lessors to commit to Airbus and Boeing for the Neo and the MAX. We were the launch customer for this brand new airplane, the A330neo, which will deliver in 2018. And we have deliveries of the 787-9. So we've got real estate, very valuable real estate, because the manufacturers are sold out. But in my opinion, and I've been doing this for 25 years, I think the depth of our relationships globally. We've done business with over 150 different airlines over the last 25 years. And those relationships are deep, and they provide us deal flow. And they're absolutely critical.
All right, congrats on a great quarter.
Thank you very much.
And thank you for watching The Street.